Please let me know when the recording starts, Katerina, please. Thanks a lot. Welcome everybody, welcome to my webinar, broadcasting live from Mexico City. This is me, myself, Alberto Alvarado. This is my free YouTube channel. In any case that you haven't subscribed, I strongly suggest you to do so. In the search box in YouTube, you type iiivb Stream Room channel. This shows up and you click subscribe. And I am just intrigued at the moment. Guest 75, who are you? Do we know each other? And thanks, by the way, for that comment. I feel flattered about it. No, not yet. Hope sometime in the future. But no, not yet. So, who are you? I'm just intrigued. Just in any case, maybe we know each other. Oh well, yes, I have some of them. Some of haters. I really don't know why. I just come to my thing. Well, yep. It's their job. Okay, so let's begin. This webinar is going to be about the old same thing, reviewing my apparently haunted account in this trading contest, because I really cannot make it to break even no matter how hard I try it. And we're going to review the trades that we have opened. We had almost one trade closed at a loss. But well, I'm going to show you. Well, but first of all, this is the trading contest profile. This is me myself. As you can see, it's terrible. 25.7 again. 387th place. So this explains itself. It's terrible. This is my account. So yeah, yesterday we were here. Now we're back here. I'm going to show you why. And I still consider that maybe I have some chances for all these trades to close profitably before Friday, at least I hope. In any case that happens, yes, this account will get above break even, but of course, who knows? The trading world's very complicated. We have had wild movements in the dollar-Japanese yen and things that maybe the markets were not foreseeing to happen. So we're going to review that, and I wanted to show you this trade. I want to look at this. This is a short trade that I opened on Australian dollar versus New Zealand dollar. But this was very awkward because you already know that I am bearish on Kiwi. And that trade actually it's going great. Unfortunately, that trade is not open here. I don't know. I believe that maybe I was so tired that I just forgot to open it here. But it is going very well. I'm going to show you the chart. But well, this trade actually goes in contradiction on the New Zealand dollar, United States dollar latest behavior, latest performance. But well, as I was explaining yesterday, I was analyzing during the weekend the latest price action in the Aussie Kiwi, and I was seeing some in the lower time frames, of course, not in the 4-hour. Very strange price action, potentially pointing to the downside. So when the trading session started on Sunday evening, this pattern showed up. So I said, okay, no big deal. If I was considering shorting this thing, and this is something that I've been saying during a lot of webinars, that being a trader is developing a skill of, call it whatever you want to call it, to feel the market, to feel what is going to happen, to have the intuition, to imagine what could happen, etc., with a more or less acceptable accuracy. Okay, the technical analysis, the chart patterns, they won't ever tell you what to do to buy or sell. Okay, so this was like, okay, I was thinking about shorting this, maybe even if this goes against my short New Zealand dollar versus American dollar. But I wanted you to check this out. This moved. I was saying, okay, I'm shorting this. When you short this kind of double top, what you're expected to do is that you short and you put the stop loss above these heights, okay? Of course, this could become a triple top and then to drop, but okay, we cannot foresee that, so we just manage our risk. And guess we were barely at 2 pip of closing. Let me check if that trade's still active. Yeah, and actually it's even better, it's lower. So yeah, we have chances overall, because it is after hitting the 107 resistance, that this could actually go to the 106. That, as you can see, is a very decent movement. Of course, after this move to the upside, maybe if this gets to the 106, this could take more days, or at least maybe I would move. It depends on the price action. Maybe I would just move my take profit to here, just to not continue risking any further movements to the upside. But well, this is what happens. You need to put a stop loss in some place. Usually the best place to put a stop loss, and you need to think like a big trader, like a big institutional trader. If you have a big position, a very big position, what you really want is that if you want or need to use a hard stop loss, meaning this kind of stop losses, for some reason, you need to figure out where you could find a lot of liquidity to help you close all your trades at your price that you put. And usually that is why the markets end up reverting after hitting a stop loss. But the thing is that the stop loss zone are there to accomplish a function. So yeah, imagine that I shorted here 1 billion, what is called a yard, a 1 billion Australian dollar. Imagine that. For some reason, I just want to. Maybe it's fantasy, because this is not the way it works when you're trading this amount. You don't put a hard stop loss. But maybe if the market gets here and you want to at least reduce your position at half or something, you at least need to know that here where you're going, if you're shorting here, if you trigger something to revert here or to get out of the trade, you actually are enhancing demand here, because you short here and the inverse is to buy, so you are buying here. So if you are really managing big amounts, what you should look for is to find a point, a price, where you find somebody that supplies that demand. Okay, you are demanding here a lot, maybe a lot of, let's say 400, 300 million of Australian dollar. But you don't want that to make the price to shoot up just because you're drying up the liquidity. Imagine that. So you need to find a place where you have others selling you what you need to buy here, in order that it's a liquidity zone that precisely helps you to close your trades at the best price possible. So when you accomplish that, it's what happened yesterday. I was explaining the New Zealand dollar trade. That is exactly what happened. They created through artificial tactics the illusion that the Kiwi was going to continue upwards, but that was just because they wanted to get rid of their trades in a big liquidity zone. So then they can start closing the trades at different prices, but in one range. We're going to go back to that chart if you want. But well, the thing is that in this case, the most probable thing, and I said no, and this is a double top. Well, why you thought it was a triangle? Because of this? It could be a triangle. Creatively, maybe. But it is much more like a double top. So here, if you short here and you are willing just to have your position, it's a big position, to be close at the best price possible, you know that you need to put your stop loss here, because you will be finding a lot of people precisely selling you here what you are going to buy. And usually after that, what happens is the price comes down. But that means actually people tend to judge themselves very harsh when and it's a lot of frustration when you close a trade, you put a stop loss. It's a lot of you can find a lot of complaints saying, at the moment my stop loss was triggered, the market went in my direction. Actually, that is a good symptom, because that means that you actually put your stop loss at a high liquidity zone. But the thing is that you don't want that to happen. There are some kind of stop losses that actually there are no liquidity zones, and then is when you see the price shooting up to the sky or dropping like a stone. But that usually doesn't happen. You can see this, what happened in the New Zealand dollar, and if now the market is moving lower, because yeah, a lot of people that were stopped here because maybe they put a very tight stop loss just at the top, they were just taken out, and maybe the market's going to go back again. But the advantage is you need to think like a big investor. If you are using big lots and you don't want that your closing even puts you in a worse position, you need to find somebody that actually could sell you the 100 million units that you need. So well, that's the function, and why in this very specific case, this double top scenario, this works. You put your stop loss above. I was lucky because it was only 2 pip of difference. But yeah, the most likely thing is that since I just my stop loss was not hit, now the most natural thing is that then the market will try to go down, because it has been retesting again the 107. So yeah, the most likely thing is that it will try to retest this level. So yeah, I guess I will just close it if it gets here. I'm not touching the stop loss, okay? Because after making a second analysis, yes, actually this trade contradicts the latest correlation with New Zealand dollar, Australian dollar. In the same, they're behaving like mirrors. Let me put you the. I am just reading up. Guess 75. No, I have no idea, but I don't know if we know each other. But I have like the feeling that maybe. I don't know why. So let me take the picture. Let me put the 4 hour. You can see here clearly that these both behave like mirrors. This is what very basically correlations is. It's way more complex to actually make a mathematical conclusion when some pair correlates to another. But well, this is a visual. We have a very clear visual. Okay. Well, this is going down. This is the kiwi. This is going up. So this made this swing up, and it made this swing and down. So if I was expecting this to continue going down up to the 71.35, if the correlation persists, this should continue going up. But the correlations are some things that is like a trend. They tend to change. It's not something written on stone. So yeah, after opening the trade, after finishing the webinar, I just realized that I was so tired that I didn't even see that. But I said, okay, I just decided during the weekend I did my mental analysis on the Aussie Kiwi, and I was convinced of shorting that. So I said, well, maybe I will have this positive, this new Kiwi, and this negative. The problem is that this Kiwi I didn't open into the trading context account. That was a problem. But well, apparently this trade was not closed. And another aspect, I opened 300 units. Let me show you that in another picture. Okay, here it is. This is the Aussie Kiwi, but every pip counts as New Zealand dollar. So even though it's the closest to be stopped out, actually in my losing positions is the least let's put it, is the least worse. So yeah, it's not that big deal, you know. But well, okay, so I believe that this is pretty much everything for this cross, the Aussie Kiwi. Now this trade is moving in my favor, and it's going just about to retest here. So I believe that I just skipped being stopped out, and if this gets here, the most likely is that I will close it. Again, this is the Kiwi trade. You know that since I was stopped out more or less here, I believe, in a long trade, then I was shorting it, and after having this very good data, these candles are for Yellen and latest very good data by the United States economy. It shoot up. I was explaining that this is what the maneuver that I am explaining, and I've been explaining it, that I am very suspicious that actually this happens to allow institutional investors to get rid of positions that they still had to the upside, because the volume that we had in this very candle was very high, because we have the weekly trend line that I've been talking about, and it was just at a moment it touched that line that the volumes shoot up to the sky. So a lot of people thought that the market will try maybe to retest this 73.60. Since this happened, I was very suspicious that that was a maneuver by the big guys in the markets. And actually what happened was the complete opposite. It continued selling off. And this was very clear. The fingerprint of having a huge volume while it touched this weekly trend line. We don't see it now because it's not drawn here, but you remember that I've been talking about. It just touched it to the pip, and it shoot up, and then sold off. But because of the volume that happened here, it made no sense. That a lot of volume, of buying volume, happened here, just to see the price continue dropping. So yeah, as you can see now, we have this channel up, just broken. So the no-brainer point is the 71.35. That is my actual take profit target in this trade. It was firstly at the 71, but since the latest things that happened, the most likely thing that after having the price hit here, it could move up, at least trying to retest this trend line again. So yeah, this is everything about the Kiwi trade that we've been monitoring lately. This is my list of trades. As you can see, my balance is here. I have this in a loss. I have 135% of leverage used. All my positions are in red. I am not that worried. I'm going to explain you in some minutes why. I just explained the Aussie Kiwi and the Euro Pound. So we're going to explain this 1, 2, 3. Pound Kiwi, Pound Swissy, and Mexican Peso. Well, the Mexican Peso, you know exactly what why and my logic behind that. I've been mentioning it in the latest webinars. So I believe that maybe it's not necessary to go through the same process. But here's something interesting changed. Here we had up to yesterday a double bottom configuration in the 4-hour chart. But now the highest quality chartist pattern just became the falling wedge. So yeah, now we're having a descending pattern, but I still believe that this will retest the 20.75. I was the firstly eyeing the 21, but no. This something very interesting with this high happened. Let me see if this pattern still shows up. Let me just have a here it is. This both are the Mexican peso chart for our charts. This is 65% double bottom of quality. This is 71. We have had this pattern for the latest days, I believe since Wednesday last week or something. And well, I was precisely betting that the price will go to that. Look at this, 20.75, this high. This was one of the land clue prices in this double bottom thing since last week. So this is a no-brainer point. And now we have this higher quality 71% falling wedge. That precisely one of the levels is precisely this. So in any case, this really breaks it. Yeah, it will be very fast. If the price gets here to this level again, what I believe is that it will continue moving up to this place very fast. I don't think that if the market makes it again to these levels, it will retrace back and try to go up. No, I would rather believe that maybe this will continue moving up to here and then maybe fade away. So that is why I am still holding this trade open, even though this trade is in a loss. But we have to remember that I actually closed a positive trade in Mexican peso last week before the weekend leverage reduction. So yeah, I just the trade that I have that is open now in the Mexican peso is the one that I decided to open on Friday after closing my initial position to adapt it to the reduction of leverage. So I just keeping that trade open. So yeah, it's only the continuation, and it's smaller in size. So yeah, it's a trade that is strategically designed to do that. Even if now it's in a loss, here you can see my entry point is this, and now we're here. So it's not like a disaster, okay? Actually now, well, I am still 341 pips against. Well, you can see that the logic prevails, and that's what is important. If you're going to hold on to a trade, at least the logic behind it needs to prevail. And what makes it to prevail to me, first of all, that my stop losses are not hit, and that the major chart patterns that confirm me to open the trade in the direction that I open it are still active. I want you to check this out. The euro pound and the Mexican peso tend to behave in tandem. Not the exact same thing, but at times they like synchronize, and this is the best example. In the 4-hour chart, we're having here a double bottom. The same that I explained that we've been having since Wednesday last week in the Mexican peso, this double bottom. Okay. So yeah, the Mexican peso, even though now the highest quality is that falling wedge, we had during several days this double bottom. So when I was yesterday, I decided to open a long trade. As you can see here, my entries here. The market retraced. It's above my stop loss here. It has a reason why I put it here. You see this? This is the support zone that is respected, and this is a psychological level, 0.85. So when I decided to open a trade here, I knew that we could have a bounce to the downside against. I had visualized that before opening it. But the thing is that since I didn't know if the market since yesterday was going to try to move to this take profit target, and I considered it was a one-to-one risk reward to put it to open it at that price, to put this take profit and to put this stop loss, I said, okay, let's do it. Let's just open the trade. It bounced against me. I realized before opening it that in any case, this psychological level is this level. So that is why I am only putting my stop loss below. Not even here. Here you cannot see it correctly. If I had put it just at the bottom of this swing, it would be a little bit lower. No, but I don't think this is necessary. If this 0.85 and this support is not good enough to make it move here, I just would simply take the loss. The euro pound is something that you need to treat with a lot of respect, because since the winning and losses, first of all, the margin that you use is considered to be higher because you are buying euros. So euro is more expensive than dollars. But besides that, the way to measure your winning and losses are in pound, because it's euro pound. So every pip counts like 2 times a dollar pip. It's less than 2, but well, it's higher. So you need to treat with a lot of respect. Overall, in this kind of trades in euro pound, when you have this kind of setups, there is no need to say, okay, I will put it lower. No, there is no need to do that. This is the psychological level. We see that this price was very good enough to stop this movement to the downside and then to shoot it up. So what I believe is that the market should do something like this, but I'm not waiting for this to retest this highest part. I'm just settling with the 0.8625. So yeah, even though when you open a trade, you need to open it with an open mind that the market could go against you for some hours, and you need to try to look for smart ways and smart levels to put your stop losses. And in this case, it was a very good one. The 85 below, and this confirmed by this. And besides, we have double bottom scenario in the 4 hours. So yeah, even if this ended up going against me, a lot of people would try to at least bet at some point that maybe this could try to reach this level. Because in the 4 hour, this is a beautiful double bottom with 86% of quality. This is very high quality in the 4 hours, so I am not the only one watching this. So well, this is how this trade has performed so far. Let me go to the next. pound Swissy trade. This was a disappointment, a very sad disappointment, because I was saying here that I decided to short this, and I shorted it at resistance level. But what it ended up happening is that it went against me, and again, see where I put my stop loss. I didn't move the stop losses, and they were positioned in very good places. In this case, 125.4, 25.40. It tried to test it. Why I put it here? Because we have again a psychological resistance here. So I said, okay, let's give it a little of room to breathe. So I believe that 40 pips, according to the price action, etc., was more than good enough. And yeah, the calculation was correct. The problem is that maybe after having the price retesting here, you see here the 4-hour chart, a triangle of 81% of quality. It's a very big one. But look at this. Look the moving average. It's just touching kind of above this trend line. So yeah, there are huge chances that when the price gets here, it could move then up and take my stop loss. So what I will be watching in some hours is what the market does after testing, in any case that this continues going down, after testing this lower trend line and touching this moving average to see the volumes that show up there. I will start watching maybe the 15-minute chart, maybe the 10-minute, and the volumes are going to tell me if they are convincing. I am convinced that if we face high volumes here in the lower time frames, then the demand is real, and then maybe I just would close the trading in a very small loss. But if I don't see convincing volumes, then I would consider that it will try to move to the 124, and then I would take the profits there. But all depends what happens here. If the market continues going it continues going without taking any pause, of course I will then leave the 123 level as take profit target. But it depends. So I will be watching that in the next hours. Last but not the least, pound Kiwi. Okay, here it is. This is a triangle that is not looking very convincing. 66% of quality mathematically. I personally dislike a lot this triangle. I shorted here for the same reasons than the other. Because it was a resistance, it continued going up. In this case, I put the stop loss above this level. It's 0.75. Just got to the 0.74 or 1.74. So yeah, since I believe that this chart pattern should be already ruled out, maybe the market will try to retest the 73, and then depending on the support, maybe I would decide to close it here with a small loss. But I honestly believe that if this makes it to the 1.73, it will retest this level, or even the 172. So it's just a waiting game. Wait me a second, please. I'm back. So, well, just check the balance in my trading contest account is getting better than some hours ago. So yeah, I believe that usually we need to, the Monday and Friday usual trading conditions are very particular. The Monday usually means slow day of accommodation. Specifically in the yen, we didn't have that scenario. Actually, we had huge volumes in yen yesterday, even if it was Monday. But the thing is that usually on Monday, if you open a trade in any direction, maybe you could expect some kind of movement against you, because that is normal. When I decided to open the trades, in this case for this week, for the trading contest account, all were based, if you checked all the charts that I just showed you, all the chart patterns that confirmed me my positions were in the 4-hour chart. So that means that you're not basing your decision, your stop loss and your take profit targets in a being over optimistic on the potential profits, or being and using wider stop losses than needed because maybe you were fearful to put a tight stop loss. No, all the trades were open using 4-hour chart patterns. So yeah, I feel confident that even if two of them were almost closed, the markets are today the most likely things that will try to move in my favor, and it depends on how well the markets move in my favor or not. That maybe on Wednesday we could have the ultimate continuation of those trades in my favor. In any case, that today we don't have any kind of convincing movement that put it, what I am expecting for tomorrow, to have my positions in green, all of them, or at least the sum of all of them in positive. If for by tomorrow at this moment I don't have that, the most likely thing that I will at least close one trade or two. So that is what I expect for this Tuesday. So yeah, I believe that's pretty much everything for today. I've been kind of working extra hours since Saturday, by the way. So I really need to have some kind of rest. In any case that I decide to change my trades for the competition or not. Some of these trades are open in my live accounts. Not all of them. Some of them. For example, the Euro Pound trade, that is open in my live accounts. In all my live accounts. With that stop loss at, what is the stop loss that I told you? 0.8475. So yeah, I need to have some rest in order to have a clear mind tomorrow, in any case that this doesn't get any better, to decide what trade to close, etc. The more time it passes, the harder this is getting to put it back to break even. The competition ends on Monday. This is the last trading day, if I'm not wrong. Well, I will have Monday and Tuesday next week. But yeah, I need to have a recovery with this trade. So I feel very confident. At least the analysis that I made some hours ago are still holding possibilities. Not the kind of possibilities I would like to have, but yeah, I still have chances that at least two of the trades that I have opened are closed at the maximum take profit target. So hope that happens, and that will help me to put back the account to break even. So yeah, today it was only that, the review of the my trading positions. Let me close some things because my computer is heating up. Okay, here it is. So, well, I believe it's time to call it a webinar. Remember that tomorrow I will be reviewing. I will need to check first of all, I need to rest because I've been doing some other stuff during my daytime, so I am kind of tired. I feel like a pain in the head, so I need to rest. Uh, I was just wanting to comment something before leaving. What was it? The why I open the euro pound trade in my live accounts and maybe the other no, the rest I didn't open them. First of all, because the quality of that double bottom in the 4-hour chart is 88% in the euro pound. And besides the fact that the stop loss is below a psychological level that some days before exactly worked to stop the movement to the downside and move it up. That is, even though it's strange because you could maybe believe that the weakest hand between euro and pound is the euro because of the worries of the next elections in France, etc. But well, we still have a lot of days up to that presidential elections. And just to remind you that during Brexit, the real reaction, it was just after the final results. And I believe that's what is going to happen. Yes, I still believe that euro will eventually at some point get to parity. Of course, if we have Marine Le Pen winning, of course that's going to happen in a snap. But even if Marine Le Pen doesn't win the presidential elections, in any case that she runs for the presidency, I still believe that euro will get to the party in a medium term. So yeah, I'm not opening this trade in based on monthlies, but in 4 hours. So yeah, that is why I just decided to go for it, and that's it. Excuse me if my English is not that fluent as before, or my ideas are not as elaborated as before, but yeah, my brain is fighting to stay awake. So I would like to thank everybody that even though that fact, you're still here listening to me. So guest 75, I don't know if you answered. In any case, that we know each other. You know what? The thing is that you come up with my name, Alberto Alvarado, and even though it's written, but you are the first person that shows up saying that. So that is why I said, maybe I know you. Maybe you're one of my Mexican friends that just connected to Dukascopy or something. That is why I was asking. But I believe that you are not one of my Mexican friends or relatives. So, well, I believe that now it's time to go. I would like to remind you that tomorrow I will be broadcasting as always from 7 a.m. to 8 a.m. GMT time. I don't know if you've noticed that I stopped posting in the blog, in the traders blog, because yes, I am just focusing on the trades, not on posting something, because in any way my points due to the trading posting in the traders blog are not going to change my situation in the contest. The only thing that will have a substantial hit in my performance is putting back my account to break even. So that is why I just quit posting there. I will start posting again next month for the next training competition. And yeah, I believe it's everything. I have 5 more minutes, so I would like to thank everybody for showing up, Katarina for recording as always, all the guests, and I just see that Spanish left the room some minutes ago, but thanks for being around, Spanish. So remember that I expect you tomorrow at the same time, same place. Trade safe, be safe, and bye-bye.